Hello, everybody, and welcome to Just Move In's residential expert discussion, January 2023, the first of the year. How are you, Mark? Did you have a good Christmas and New Year break?
Very good Christmas. It's a bit cold at the moment, but fine, fine.
Yeah, it was -5 here not long ago, and that was at about 10:30 in the morning. It was incredibly cold.
It is, but it's January. It'll soon be February, March, April. We only got to keep our heating on for about another 3 months. We'll,
Yeah, those energy bills are going to be biting hard at this time of year, aren't they? Definitely. Yeah. So, Mark, just obviously it's a new year and everybody has their predictions and expectations for the next 12 months. I wanted to ask what yours are. What do you think we're going to see this year? Do you think, well, let's start with house prices. That's probably the sensible place to start. That's what all the headlines are about. So, I mean, do you think that we're going to see house prices come down a little bit, a lot, or not really at all?
I think we're going to see a slowing of the market. I think prices may adjust. There's still an imbalance of supply and demand, and we mustn't forget that over the last 2 years, there's been some pretty healthy house price inflation. So it might just level. I think when we were having this conversation probably 2 months ago, we were deep into doom and gloom. We're now, when they're even questioning now, there is no recession. We're not going into recession. All right, so there's a leveling up. So I think there's going to be a slight downturn adjustment. I think if people feel that they're going to lose money, they won't sell. They're not actually losing money because they never had that money. It was just the house was allegedly worth that amount of money. So I think in terms of sales, I don't think we're going to see a crash unless we have something else. We've got a war, we've got interest rates that have gone up significantly. The indications are that with interest rates, long-term money seems to be getting a bit cheaper. We're getting some fixed rates now from lenders, which are below the current interest rates, are quite healthy. So that's encouraging people to buy. So no, I think on the rental side, we've seen the rent increases that we saw last year beginning to slow. I think that's to do with affordability. Those energy bills are now going to be dropping into the letterbox of those tenants, and they are quite significant. As we all know, these are not small bills; these are large bills. So I think there's going to be a tempering of that. We've also seen the fact that tenants are now not looking to move to another rented property; they'd rather stick where they are. But that keeps a real firm lid on supply. And I suppose we've seen the continual attack on landlords in terms of taxation, which is likely to continue. We've seen that the Bank of England is looking at the security involved with buy-to-let properties. So are they going to clamp down on that, which doesn't help existing or future landlords, and we need future landlords to provide accommodation.
Yeah, I imagine one of the safest bets of the year is that we're probably going to see fewer landlords, aren't we? There's not really a lot in it for landlords at the moment.
No, I think there's very small, tight margins. As we talked about, there's uncertainty, and I think if they will probably sit on their hands. And with a higher interest rates, you've got to remember, they might actually, why put the money into a property? I'll just put it on 2-year fixed and actually get a reasonable return, and I've got some security.
Yes, definitely. I mean, how much higher do you think that interest rates might get? Do you think we'll see the Bank of England put up the base rate much more? I mean, they reckon it's going to probably go up another percent, don't they, this year, by April, May?
Difficult. I think they're talking about at least one further rise, but I think peaking late spring, early summer. But I don't think they're going to come down particularly quickly. and they're not going to come down to the levels that we've experienced over the last few years.
Yeah, I guess
So,
a lot. Yeah, I was just going to say, I guess a lot depends on how the battle against inflation is going.
yeah, well, they're talking about inflation dropping, albeit very slightly, and that we know is the Prime Minister's big aim and target is to get inflation down, and the indications, all the predictions are that inflation will drop, but it's got to drop quite a bit. You know, we're over 10%. I think they're talking about 8%, but still, that's a lot more than it was a year ago.
Yeah, I think they'd like to see it down at 5, wouldn't they, by the end of the year, if possible?
Yeah.
But that does seem quite a big ask.
Absolutely.
Yeah, definitely. And do you think this year we're finally going to see the renters reform bill become legislation?
Well, we've had yet another answer to a question from an MP to the housing minister on the renters reform bill. And again, we get this sort of normal verbal, yes, we're still working on it, but we can't give you any indications as to timing.
Mm.
And they've said exactly the same thing about ROPA, which is the regulation of property agents. Yeah, we're working on it. We're looking for the industry to assist. But again, no real firm dates.
Mm.
We know the government is proposing, and I know that that is an argument that's going on in terms of changing 200 pieces of legislation from European legislation back into UK, well, England and British legislation. So that's going to affect on the parliamentary diary. We don't know how many people, are working on these things. So again, we're getting the same message as we've had for probably 9 months.
Yeah, I wonder whether, because there's going to be a general election next year, whether that might kind of focus minds a little bit, because it'll look so bad, surely, if nothing happens with this, you know, before the end of the year and into next year, and then the electioneering will begin, and then it'll just fall by the wayside. So they need to get on with it.
They certainly do, and it manifesto issues around rented property and deposits, lifetime deposits, etc., which really have been kicked again into the long grass. But you're right, they're going to have to do something pretty quickly if we've got an election in 12 to 18 months.
Yeah, and it'll be interesting as well to see if the government come up with any sweeteners for the property sector ahead of that election, whether we might see more stamp duty holidays or things like that. I don't know. What are the tea leaves in your mug saying?
I think in terms of stamp duty holiday, I don't think that's going to happen again, because it had unintended consequences. And I have to say, I was putting a huge amount of pressure on government at that point to give us a stamp duty holiday and push very hard. But we were, that was at the start of COVID. We're now hopefully, we haven't come out of it entirely, but it's not that it was happening. It's very dangerous to dabble with economic forces. I think if we may see something, but I'm not holding out a huge amount of hope.
Well, just switching gears slightly. I mean, this is looking forward to the year ahead again. I'm just wondering whether we're ever going to see anybody challenge the prominence, the supremacy of Rightmove, with Zoopla firmly in number 2 position. Because one of the things that we never got to talk about towards the end of last year was the demise of Boomin with the Bruce brothers there. They had an awful lot of money behind them. They had a very slick, sexy advertising campaign that I actually thought was quite good on the television. So they obviously spent a lot of money and had the budgets, and yet here we are, kind of like a year, 18 months on, and they're no longer around.
No, they've gone. I mean, their offering was different, and it was obviously attractive to agents because they had a lot of agents on it, but they had very few agents who were actually paying any subscriptions to it. And as we know, these startups, particularly at that size, hemorrhage cash. So you've got to get it back in. Many people, we've seen challenges to Rightmove over probably the last 10 years with new portals trying to come up. We've probably got 3 portals at the moment. We've got Rightmove, Zoopla, and On the Market. The problem is that the public don't pay for Rightmove; it's free. So to them, it's great. It's super. It is the first stop on a property search. People say, I'm going on to Rightmove. They don't say, I'm going to look for a house. I'm just going on to Rightmove. It is expensive. Whether or not we've had this discussion before, whether agents will continually pay. I spoke to an agent last week who's opening. He's opening an office. He's starting afresh with a new office, and we were talking about costs and talking about Rightmove. He said, I have no choice but to go on Rightmove, because if I don't, my competitors will point to house sellers as that is a weakness of my offering. So he's having one office £1,500 a month, which is quite a substantial amount of money.
That's an awful lot. I mean, it's up there with rent, isn't it, for your office? Or maybe not quite, but it's an awful lot of money. I mean, Rightmove has become almost like Google now. It's almost become a verb, isn't it, to Rightmove something? Not quite on the same scale as to Google something. But isn't it with Rightmove about 70% of the market, and Zoopla are like on 25%? And On the Market has a share as well, of course, maybe 10%.
They all have shares. But a lot of those shares are shared. So I think you'll find the Rightmove's market share is somewhat larger than 70%. But agents will list on two websites. So they'll go on to Zoopla and they'll go on to Rightmove, or they'll go on to Rightmove and On the Market of offering incentives in terms of shares. It appears that they get a higher higher level of viewings, etc., particularly on the rental side, and others. But agents like it, and it was originally an agent-owned site. Still is, predominant number of shares are owned by agents. But I struggle to think or find a reason why Rightmove would stop, because it is, as you said, it is the go-to site for the consumer,
for people. And I guess that once people who are entrepreneurs or people who fancy challenging the status quo, once they've seen a company with a lot of backing like Boomin try unsuccessfully, they're going to be more reluctant to throw their hat in the ring.
Yeah, and Boomin was about data. It was not necessarily about and associated sales of products, policies, etc. So it wasn't quite the same, but they had the best run at it that anybody's had. Probably will again. We've still got agents out there, those online agents who are still unprofitable, being funded and funded and funded and funded. At some point, investors will turn around and say that we're not going to get a return, because they're all funding it on the basis that at some point it will crack. And they will get market share and impetus. But at the moment, I don't see that.
No. So I think we can safely say that this time next year, Rightmove will still be the #1 portal, whether agents like it or not.
Probably would agree, yes.
Probably would agree, yeah. So just moving on, I mean, we touched earlier there about prospects for the housing market this year. I'm wondering if you've come across this idea of deposit-free homes, which are obviously helping first-time buyers get on the property ladder now that Help to Buy has ended. And this is an initiative. It was in the Telegraph. Did a write-up about it a while ago. And this is developer Fairview New Homes, where buyers essentially make monthly contributions towards a deposit, after which they start paying back a mortgage. What do you think of this idea?
Well, I think anything that helps buyers get on the property ladder must be good. This is a bit like rent to buy, and in fact, you rent it for a while and then you start paying money, so that's good. How lenders will view it, I'm not sure, because in effect, you'll almost be renting. You will own the property, according to the article, but you will only be paying money back to the previous owner, which is the developer, and at some point you'll have to get a loan, but they will have to be assured that there is a mortgage offer in place for them to offer that facility. And that, as we know, mortgage offers have a lifetime, which isn't very long. It's about 6 months at most. So again, there's going to have to be, unless of course Fairview have come to an arrangement with 1, 2, 3 or 4 lenders who will assist them on that. But I know that the new homes market has been severely hit by the trust budget, or whatever we want to call it, and reservations have dropped almost by a third, which is not good news.
It's not good news. I mean, the article said that they did some research that said that 3/4 of renters are struggling to save for a deposit, which obviously incredibly worrying. And this solution, according to Fairview New Homes, could bring forward home ownership by about 6 years, because that's how long it's taking people to save for a deposit these days.
Absolutely. You know, we don't want to talk about wages, but wages are under pressure anyway because of the cost of living. We did at Propertymark some research 2 or 3 years ago, and at that point, you'd be whilst you saved, you'd be paying rent of about £50,000 to £60,000 over a period of time. If you're in London, it was £70,000. That's obviously gone up because rents have gone up. So, but wage inflation has not gone up at the same level. So it's very difficult to live in a rented property and save, because at the moment you're already paying, because it's more expensive to rent than to buy. So you're probably paying in excess of 40% of your take-home pay in rent. If you're going to have to save on top of that, and you're looking at an average house price of, let's say, 250,000 to 260,000 outside of London, 10% of that is 26. You've got to save a lot of money quite quickly. And where we know lenders are scrupulous on affordability, and obviously they're stress testing it even more than they did with the rise in interest rates. I don't think we're going to see mass repossessions. I think, you know, that has been not catered for is the wrong word, but that's not going to happen this time around. So you're not going to see that huge cheap stock coming onto the market. So yeah, we'll have to wait and see what other initiatives. I mean, developers have the ability to do this. The vast majority of stock is private stock. The seller doesn't have that opportunity.
And I think new homes tend to have pretty good EPCs, and so that should make them quite attractive propositions. But obviously, if someone hasn't got the money, they don't have the money, which kind of brings me on to my next subject, of course, because some younger people trying to get on the property ladder who have the benefit of the bank of mum and dad are obviously in a much better position. And one of the things that mum and dad are using are equity release schemes. And these have obviously increased in popularity dramatically over the last few years. And now we have major companies like Aviva offering them, and LV. And they've gone pretty mainstream. And I'm just wondering, you know, what sort of impact do you think that might have long term on the property sector, equity release?
Well, we know there are billions being withdrawn from the equity that consumers have in their houses on a quarterly basis. If it can help first-time buyers, that's good in the short term. Obviously, it affects the equity that people have in their own homes, so that equity decreases over the years. So there isn't going to be that big lump sum that they were hoping for when their parents sadly pass away, although people are living a lot longer. It means that if you take equity release, you're unlikely to move in the very near future. Because the whole point is that you can take money out but still live in the house that you've lived in and love. The only reason you have to move is death, or if you move into a home, which is the conditions of equity release. I think I'm in mixed views on that, because if you look at the level of equity release, that accounts for a few tens of thousands of properties annually that are not going to come to the market that you would have expected to come to the market.
And there's a lot of
because
a lot of redundant bedrooms as well. If you get empty nesters living in 4 or 5 bedroom properties where 2 or 3 bedrooms aren't being used at all, not even as guest rooms. It seems wasteful.
Yeah, the last time buyer won't be buying because he won't be selling. We talked about first time buyers, but the last time buyer, and that's one of the things you've got to try and unjam, which is this huge proportion of houses you've just said, which are significantly larger than the requirements of the occupants, but they don't want to go.
No, and it's kind of like throwing out the traditional cycles of housing, isn't it? The houses that would be sold on, recycled, for want of a better word, are not coming to market, and everything just kind of clogs up, and we have less homes available to buy, less families able to upscale into larger properties because there's less available, and it's just kind of affecting the natural balance of things.
Well, unless we go down to sort of intergenerational housing, which in Europe, whether it's Spain, Italy, is something that just happens. You all live together, but you just
that I was going to say that model certainly makes childcare easier, doesn't it?
Yes, and it makes childcare easier. It makes care for the elderly easier because you're not having to put anybody into a home. But I don't think we're going to get there in this country. I think people like their own space and their own property. So
you mentioned space there, and I just wanted to jump in because another thing that I'd quite like to talk about today is that whether the race for space is now over, whether we can say it's over. There have been reports, obviously, that flats in urban centres like London are now a lot more popular than they were, and the prices of flats is going up faster than the prices of 4 or 5 bedroom houses. Are we now seeing a return to the status quo, or what was the status quo before the pandemic, or will things never be exactly the same again? What do you think?
I think the exodus from urban areas has slowed considerably. I think and know that some people who moved to the country 2 and a bit years ago are finding it's not quite the idyllic location that they thought it was going to be, whether that's for commuting. We know more and more people, they're still going to be working from home. There will be a requirement to come back to the office. And we know that those who fled the capital are now coming back and buying predominantly flats rather than houses. So I think it's not going to disappear because people's view, and they're used to it now. But the mass, as I said, exodus it's slowed dramatically.
Yeah, and technologies that make home working easier are just going to improve, aren't they? It's not going to regress. It's difficult because a lot of bosses like to see their workforces in the office, but then a lot of people had their eyes opened by the pandemic, and that a lot of reports, for example, say that remote working can actually increase productivity because people can work instead of commuting and work more flexibly. So yeah, unlikely that things will go back.
No, I don't think they'll go. But that movement that we saw will just slow, and we mustn't forget that people were moving out of high-priced areas into relatively cheap areas. Unfortunately, those relatively cheap areas, because of that exodus, have now increased in value significantly. We're to West Country, east of England, even in the north. To supply and demand. If there's demand there, the prices will go up, and the supply, because they're not urban areas, they're rural areas.
Well, I guess one advantage of smaller properties is that council tax should be a little bit lower, and I'd like to round off today's discussion just by talking about council tax. We talked about politics a little bit earlier on today, and that there's going to be a general election next year. So maybe we might finally see some reform of council tax, or even the replacement of council tax. And I'm just wondering where you see this one going.
Um, it's very different. Council tax, as we know, goes up on a yearly basis. We know local authorities have got the headway now to increase them relatively significantly. We also know that the values of properties that were put into certain bands is hugely historic. It took place in the early 90s, so it's nearly 30 years old. But we know that the number of bands are limited. So whether you're living in a £500,000 house or a £5 million house, you are paying the same council tax. It would be a hugely popular decision to take it away from property and put it somewhere else. But they're not, because of what council tax funds. It has to be paid for. So it's either going to be an increase in personal taxation, which the current government has said they won't be doing, or they've got to find an alternative way of raising that funds. But we all know we're going to get bigger bills come April. We've got 2 months of no bills in February and March, but it's a big ask. I mean, it could be, if Michael Gove is still in the levelling up position that he is at the moment, that might be something he could look at. But as we haven't even grasped, the Renters Reform Bill and other things like that, I'm sceptical.
Yeah, it'd be interesting to see how long Michael Gove lasts. It'd be nice if we could have the same person in situ looking after housing for over a year after all the problems that we've had and the huge turnover of different ministers. But I was reading earlier today that it's quite likely that Michael Gove might have a falling out with Rishi Sunak about housing targets for building new homes at some point this year. So I guess we should watch that space.
Well, we've already had a rebellion by MPs on targets and on planning, and the target was 300. Now you should aim towards that, but there's no specific targets in mind. And we've talked in previous discussions about the need to increase house building, but we've also said the limitation of it is it's predominantly in private hands, which are profit driven rather than supply driven without without providing accommodation to people who deserve it at an affordable price.
Well, I think what we should do then is in 12 months' time, we should look back at these predictions and see how right we were. We're probably not too far out.
I don't think we'll be far out this year. I think if you look back at what we said at the beginning of last year, we're well out.
Yeah, we just want less turmoil in the world generally. We could do without any more pandemics. We could do without any more wars. Hopefully we've got some political stability now. So fingers crossed.
Fingers crossed. We'll hope. Keep our fingers crossed, James.
Well, thanks very much for your time, Mark. We'll reconvene in a month's time, and we might have more sort of political news to talk about, because obviously this month there hasn't been much new going on in Westminster, so we might have some more current affairs to talk about next month. But anyway, yeah, thanks for your time, and thank you everyone for watching as well, and we'll see you again in 4 weeks or so. Thank you. Bye.